I'm Debi Peverill, and you're listening to the weekly tip from Peverill Financial Training Group. Today I'm talking about the question I get asked 100 times every personal tax season, which is, what do you need to do my taxes? Followed by, what do I need if I was going to do my own taxes? What do I need to gather? So the thing about this is, the Canadian income tax system is set up as self-assessment. So you have to report all your income and claim all your deductions. That's the way it works. So with Canada being a pretty high tax jurisdiction, any income you've earned this year has to be reported. If you think you've got some income that isn't taxable, it's unlikely, but you should still tell your tax preparer about it in case you're wrong. So our system works on a bunch of these T numbers. So your tax return is actually called T1 if you're a personal tax return. Corporate's T2. T3, if you receive trust income from a mutual fund, for example, you get a T3. If you're employed, you get a T4. If you have investment incomes, you get a T5. These forms are all sent to CRA and you report them on your personal income tax return. For many people, that's their source of income. That's it. These T-slips will be all of the income that they need to report. If you have pension, you receive the old age security or the Canada pension plan, again, there'll be slips for that, the TOAS and the CPP. If you sold shares, there's a T5008, which will come your way, which will have the information on it about the shares that you sold. That should include all of the income that you have, these T-slips. If you've got self-employment income, you're reporting on your personal return. We have a video for that on the Peverill.ca website, which you can take a look at. Then we've got the deductions. What can you deduct? Well, not as many things as you think usually, although if you think you've got a deduction, bring that to your tax preparer just to be sure. You can deduct medical expenses. You can deduct charitable donations. You might have an RSP deduction, although you should look at my tips on tax-free savings accounts before you think about your RSP. You might also have some interest you think you can deduct because you've invested. If you've invested otherwise than in your RSP or tax-free savings account, then it is possible that you have a deduction for that. If you have children who you have in childcare, then there is a deduction for that. So think about these things. Where did I make money? Where did I spend money? Compare all of the calculations of what you have received and what you have spent. Put that information together, and you should have everything you need to do your personal income tax return for this year. On the Peverill.ca website, we have checklists for people who are self-employed, people who are direct sellers, and people who don't report any business income. So those checklists will give you the information you need, and there's a longer video on that website which talks about each source of income. So check that out if you still have questions.